What is going on, everybody? Welcome back to Trading Learning 101. It is October 14th, a little after 12:40 p.m. on a Sunday. Just give it a couple seconds, let people join up if they want to join up. Hope everyone's having a good weekend, studying up and preparing for the upcoming week. I'll go over what I expect to happen this upcoming week and the stocks I'm going to be watching this upcoming week. Alrighty, I got all the invites set out. We got this up. We'll go back to Monday. Let me get my notebook out right here to go over the days of the week. Just as a heads up, I do want to keep VTVT on my list, as this is still hanging around. This is the 5-minute here, zoomed out. All this week, it's in this range from $3 to $4. Right here. It does look like it's starting to decline, making lower highs. It could crack this $3, but until it cracks that $3, this is still on watch. It closed Friday just above $3. So, like I said, until this cracks $3, I'm going to be keeping an eye on this. So let me write this down. VT. Still holding $3. And then another one was AGRX. AGRX here, if we zoom out on the 5-minute, it made a good U shape right here, as you can see. And it came right back up to the old highs here. And then now it pulled back again, back to this 55-cent area. And now it's looking to work its way back on up to this dollar area. It keeps getting rejected pretty hard at this dollar level. But with the market conditions, the way it's been, the market correcting itself, if we still continue to see the market correcting itself this upcoming week, traders love to revert back to stocks that were hot the previous week. So VTVT, AGRX, EARS should all still be in play, in my opinion, if the ETFs and the inverse ETFs are still in play and have the attention. So I'm also going to write down AGRX. Last week was a crazy week. Monday, Tuesday, Wednesday was pretty much, well, Monday, Tuesday was normal market conditions. And then as soon as the market opened Wednesday, about an hour into the market, everything was fine, and then the market just started pulling back and crashing. And then Wednesday and Thursday is when it dropped really hard. Let's go to the market strength here. And Friday, I felt like we seen a good bounce day. A lot of stocks were up Friday, but it's going to be interesting to see what happens this following week. If this is the SPY right here. So Friday, Thursday, Wednesday, Tuesday, we were up here. So Monday and Tuesday, it was looking like it was going to bounce right off this support right here in this 50-day and start to trend back up. But the market said, it's time. And we've seen this sell-off from 100 or 287 all the way down to 278. And then the next day, it gaps down, pops up, gaps down, opens up at 277, pops up here to almost 280, and then continues to sell all the way off, all the way down to 270. And then it comes back up and it closes right here at 272. And then the next day, we got a big gap up, right up here to 276, just above the 200-day moving average. And it fell down again, 272, and then it pulled itself right back on up. So these long wicks right here, that's showing me volatility in the market, in the index here. And these long wicks as well, it's showing me that the prices are kind of being rejected lower. That's a good thing. If you have long wicks like this at the bottom, you see all down here, you see all these long wicks back when it retraced all these times. That means the price is getting rejected at these lower levels and it's pulling itself back on up. And markets are different from what they used to be back in 2008, in 2000, and when we had the crash in, what was it, 87, I believe. Now it's all about computer trading. So when these indexes and stuff, and this is my opinion, when these indexes pull back to these levels here, that's when computers and stuff will kick in and they'll start buying and bringing it back on up. So in my opinion, we're not going to see a crash like we have before in the past, because all of that stuff in the past was all manual trading. Now all of this is computer trading. Just like what they had the flash crash back in, I think it was 2010. But after that, it's just been rising and rising and rising and rising. See, this was the economic crash here in 2008. And then 2010, they had this little flash crash. I think it was like right here in this area. I can't really remember, but it's been a good solid 8 years, no, 10 years, 8 to 10 years of just grinding up and up and up from 136 all the way up to a high of 293. Of course, you're going to have pullbacks and corrections, and so far this year, we've had 3 of them. Right here was the start of the new year. And right at the beginning of the year, we had this first correction, and then it came back up, and then we had the second correction here. And then from April to October here, we had a nice steady uptrend up, breaking to new highs recently, and then we recently just had another correction right here. So this upcoming week, all attention is going to be on this. There's going to be really no volume in the penny stocks. There's going to be no volume in the stocks that normally what people play, AMD, Facebook, the big cap stocks. All attention is going to be on the indexes and the inverse ETFs because people are worried, people are panicking, people want to see what the market is going to do. Is it going to start to rebound back up, or is it going to continue to keep falling? Because this time when the market corrected itself, it fell below this 200-day here. And if you've seen the previous 2 times we had a correction here, it simply came down to the 200-day and bounced right off of it or fell just below it, and it was able to recover itself back above it and then start trending up. This time it fell below it, closed below it, and it ended the weekend closing right at it. So it's like I said, it's going to be interesting to see where this opens up Monday. Monday morning, I would wake up and check the futures, see if they're up or if they're down. If they're down, look for people to continue probably panicking and for more sell-off. If they're up, look for a possible, it's going to probably be in a range, I would say. But with that being said, going back, real quick, let's just look at the NASDAQ. Now, every weekend when I do the market recap, even before the correction, the NASDAQ has been taking a hit ever since the end of August. All of September, it was cracking down, and then just recently, it just took this big downpour right here. And every single weekend when I go over market conditions and do a weekly recap, every week I said the NASDAQ looks ugly and it doesn't look good. The SPY, it seemed like it was just petering on air. Every time it made a new high, it wasn't a lot. It was just a tiny little bit. So it was like we were gliding on air up here at the top. And that's the market telling us, in my opinion, that, hey, there's no more pressure to move up to make highs. I'm exhausted. I'm tired. This is it. Comes down, comes back up, makes a tiny, tiny, tiny little bit more of a high. And it's the overall market telling you again, hey, I'm tired. This is it. I don't have the power. I don't have the strength to give you a big new high. This is it. And it came back down, comes back up, and again it tested the high here, but it didn't break to a new high. And it's the market again telling you, hey, this is it. I'm telling you. And then look what happened. It crashed down. And then when you look at the NASDAQ, it did a triple top right here. And then all of September, it was just selling off. You had a bounce here, failed. Comes all the way down, bounces here, failed. And then it falls below the 200-day moving average here. And this is before the market corrected itself and pulled back with the S&P. It was just petering right here, just below the 200-day. And that's another sign of toppiness, and that this isn't done. And you see how it makes that rounding U shape right there. And it's the NASDAQ telling you, hey, I'm still tired. I don't have the strength to move up. And then boom, from 87 all the way down to 80, it crashed. That's why this is the importance of looking at these index every single day, every weekend, seeing how they performed over the past week. Remember, 3 out of 4 stocks follow the overall market. If the market is breaking out to new highs, like the SPY, 3 out of 4 stocks are green and breaking out as well. If it's correcting itself and down like this, look at all of last week. Majority of all the stocks had huge pullbacks and were red on the day. So that's the importance of looking at these indexes every day. And when these indexes crash, give you an example here. Now, when these inverses or ETFs crash, the indexes, the SPY, the NDX, that's when traders turn their attention away from the normal stocks and they start putting their attention into inverse ETFs and ETFs. Now, we see here, this is TVIX, and this is the SPY. TVIX is an inverse ETF. It does it does a mirror opposite image of whatever the SPY does. So if the SPY goes down, TVIX will go up. And TVIX isn't something you invest in, it's something you trade. It's a decaying stock. As you can see, TVIX on the daily, you can see it's nothing but down, 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 down. The last time here, when the market did the correction here at the beginning of the year of 2018, TVIX was at like $8 a share. And when it corrected itself, TVIX ran all the way up to $20. And then it came back down to like $8. And then they did a reverse split on it to bring it up to, it was like $50 or something. And then it started to decay again. So disregard the price here on TVIX in the history. It's not correct. This thing decays all the way down to like $5, and then they always do a split on it and bring it back up to $50, $75, and then from that it just decays all the way back down, and they repeat it over and over and over again. But going back to this is you pretty much can compare it right here. You see the stock had a big pullback here, it spiked here, it rised, a big pullback here, you got your spike here. And then recently we had this big pullback here. Look what happened here, it spiked. And TVIX this past week went from $25, it touched $52. So it just goes to show you, you know, even when the overall market is crashing, there's still opportunity out there for longs to make money. It's just all about educating yourself and knowing the opportunities to take advantage of when stuff like this happens. You know, I get into these Facebook groups with a bunch of newbies, and I hear them every day when the market's red. It was a short day. There wasn't opportunities for longs. When I see differently, I see that there were plenty of opportunities out there. There were opportunities for great bounce plays, panic plays. You know, the more time you study, the more time you put into this and look at different strategies, the more opportunities you get into your bag of tricks. So now that we just talked about the market conditions, let's go back to observing the market. I want to go back to Monday. So this is what happened. Monday I took a trade, Tuesday I took a trade, Wednesday I took a trade. I was profit all 3 days straight. And then Thursday I didn't trade. And then I don't ever trade on Fridays. And then I finally traded on Friday. I traded RIOT. RIOT was looking to break out, but it just didn't have the strength. And this is a good example of sticking to your rules and sticking to your game plan. I normally don't trade on Fridays because I normally lose on Fridays. I've always lost money on Fridays. Fridays suck for trading for me. And I broke my rule and I traded Friday. And RIOT spiked from 220 to a high of 311, pulls back here to 271, and then it started forming these higher lows, building its way on up, U-shaping up to the resistance here of $3, 311. And I was like, hey, this is working its way up. Why not take a stab at it, get in, and if it breaks out, sell into the breakout. this started to move up, and it did break out. I got in. It was like with 1,200 shares at 280, and this moved up to $3, and it broke over 3 to 3. It hit a high of 305, and I was anticipating it to break out from 3, retest 311, and maybe test 325, and that's when I was going to start scaling out of my position. But I didn't see buying coming in on the ticker tape here, and there was just big sellers on the ask here, and I was seeing huge sellers on the tape here, but I got stubborn. I kept holding on to it, and when it peaked out here, it crashed down so much real fast. I sold it at like 270 for a 10-cent loss. So that was a loss right there, and it ended my 3-day in a row win streak. But I am still green on the week. And it just proved to me right there, you know, stick to your plans, stick what you know. Normally on Fridays I don't trade, like I said, because volume is very light on Fridays. It's hard to trade on Fridays. Every single minute that goes by, there's volume being taken away from the market because people make their trades, they take their profit, and they call it a week, and they enjoy their weekend. And every single minute, like I said, that goes by in the market on a Friday, you're losing more and more volume. And look what happened. It had its great spike here. It pulled back. It started moving itself back on up to break out again. And it just didn't have the volume. And it faded off. We also had ears pop up. I'm not too much of a big fan of trading EARS or what's the other one? I think the other one's like EYES or something. But from the past, I've seen EARS pop up and fall right back down. And this had a great run Thursday and Friday because of the market conditions, I believe. There's nothing going on in the market. Traders want to trade. You got your newbies that want to trade. They're looking at these low-priced stocks. Last time the market corrected itself at the beginning of the year, the stock the traders kept going to was Aker, A-K-E-R. Both times it corrected itself. It was like clockwork. Every time the market corrected itself, all these traders swarmed over to AKER and they traded it. And it moved it up in price exponentially. Let me see if I can pull it up here. Let's see. So the beginning of the year was right here. And like I said, the market started crashing. This spiked from an area of $1.20 up to $2.23, pulled back, ran up to $2.40, pulled back, and it hit a high of $3.71. Traders just kept attacking this. And it didn't do anything this time. But that's the importance of being here every single day in the market, because you remember stuff that happened in the past, and then you'll slowly start to remember the market likes to move in cycles and stuff repeating itself over and over and over again, and then you'll catch on. But going back real quick, what else did we have? We can look at IGC and NBEV. I know IGC's looking pretty bad. Yeah, look at that. when I zoom out here on IGC, this thing had a great run up from 37 cents to 2.18, $4, all the way to a high of almost $15. And then recently, you put a line on this. This is a big line. If I can move it. Yeah, I'm still going to keep that up there. But you could see it's making lower highs recently, and it's just fading off and fading off. I'm still going to keep this $4 support line here until it comes to that, and 350, but I'm still going to keep IGC on my watch list because anything can happen with this. IGC, like I said, it could just be consolidating right now, taking a break, and like I said, anything could happen with IGC. It's not like the pot stock or pot stocks in the wheat sector is just completely dead and done for. It's just right now, the overall market is having a correction. That's where all the attention is currently going to be. And then until that ends and the strength starts to come back into the penny stocks and the large cap stocks, these stocks are going to decline. And when that's over, attention could come right back to this. IGC could come out with a press release. And just like NBEV, let's go to that one real quick. I'm going to be keeping NBEV on my watch list as well. So all the way back here from $1.30, this ran up to $10, pulled back down to this $4, ran all the way back up to $10, pulled back to $6.50, and then ran up to 9 something, $9.50, and then recently it's just been pulling back, and it hasn't been able to really break over the $6.50, $6.75 level right here. Let me see something real quick. Yeah, just look at the choppiness on this thing. It's just gaps up, gaps up, gaps up, gaps down, gaps down. But currently, right now, it's in this range from 5.60s to 6.75, $7. So I'd be wanting to see this hold support at $6 currently, because there's a little gap up right here. There's a gap right here. Stocks love playing these gaps and having these gaps act as support and resistance. You could see right here we got a gap from here up to 5 or 663, and if you come over and glide it across, you can see this gap held as support right here, right here, right here, and then when it finally broke that support, it acted as resistance right here, here, a little bit here, and then if this was to come back up again, this would act as resistance again. And this is the power of looking at the market in different time frames. So I'm like an NBEV. I really am. I'm just going to keep it on my watch list until it shows strength again. Right now it's just in a range, consolidating. It could break either to the downside or the upside. I don't want to predict what's going to happen. Real quick, what else do we have? We had ALT pop up, I think. Or you know what? ALT, I think, came out with an offering. Let me see. Hold on. Ugh. Look how ugly that looks. Look at that. $36. Gaps all the way down to 15. Sells all the way down to 8. Gaps down to $4. This thing is ugly looking. Yep, that's what happened. Monday, it was hitting a high of 1050, and then they came out with an offering, and it dropped it from 10 all the way down to 475. And then it looked like, you know, it was going to try to get momentum and push up because traders are looking at it. Hey, this is at a bargain price. This was just at $10. Buy it. And it just slowly died off. Just because a stock was at $10 and it gaps down to 5 doesn't mean it's going to go right back up to $10 again. This thing could never see $10 again in the history. You know, you never know. And what did I just say when I looked at a bigger time frame of this? I said, ew, this looks ugly. Why would I want to touch this? And that's what other traders are saying, or investors. Why would I touch this? This thing is disgusting looking. Gaps up, it moves up in profit, and then it has this nasty gapping down. You got to think of psychology on these charts. What are other traders seeing? What are other traders thinking when looking at these charts? Along with what are you thinking as well? That's why I love using moving averages on charts, because other traders, moving averages are very, very popular, and other traders love using moving averages. So I'm going to use what other traders love to use. You can see right there a good example. The stock moved up to the 50-day and it couldn't break that 50-day because other traders have it on their charts and they were using that as a resistance. That's price cannot exceed that. That's where the average price the past 50 days is topped out at. OGEN, let's look at that one real quick. It seemed like the past month, it's been like the same stocks over and over and over and over again. IGC, NBEV, OGEN, ALT. Just give me 1 second, guys. All right. OGEN real quick. Let's go over this. I can't remember if OGEN did anything. It didn't. It just fell off. Okay. Well, if I go back to my weekly watch list, this was the watch list I had going into last week. I can take OGEN off. I don't like that one. I could take ALT off. I don't like that one. GTXI. Ugh. That had a big drop. Let's see. Let's look into this real quick. Go to the 5-minute. Back here on the September 20th, it had this big drop off from 23 all the way down to 250 and $1.70. See, Friday, Thursday, Wednesday, Tuesday, Monday. Monday it went from $1.65 to $2, but then it just continued to sell off. I added GTXI on my list to see if it would get any sort of attention or momentum, since it was at $24 and it recently had this big gap down. Traders could look at this and be like, hey, this is a bargain price. I'm going to get in on this. And then other traders, and then it starts to get momentum and move back up. And now that I'm starting to talk about this, this had a big gap down because it had it failed its FDA like phase 3 or something. And this is why it had its big gap down. And when you look at the daily chart on this has never been at this area. And it always seemed to hold, but when you look back on it, look what it did. It sold off here and gapped down, and then it just kind of like U-shaped a little bit and then just went sideways. When you look back on these, you could just see the history and the personality of this stock. Big gap down here, sideways for a few months, and then you got a spike and then down. So it does show when it likes to move, but it's got some nasty sell-offs. And I think GTXI has a decent float too. Let me open up trade ideas real quick and see. Yeah, float's only 15 million on it. I'm still going to keep GTXI just on my back burner, like my back burner, just to see if any momentum ever comes back into it. At the break of it, it looked like $2. Because this would come, it would come all the way down to $1.30 and then move all the way up to, it looked like $2.38 here. Pre-market spiked to $3.50. See, just that one day right there had an opportunity on it. After it gapped down here, you had all these days of just slowly dropping off, and then you got this move up pre-market to 240, and then right at the morning bell, it spiked from 230 to 332. GTXI, yeah, I traded this on that day. I made over $700 on this right at the morning bell right here. That's what happened. Okay. And then look at after that, it just continued to fall off. And then there was a little opportunity here at $1.67 to $2. But I'm still going to keep this on the back burner, like I said, just to see if any follow through momentum can come into this. You never know, they could release news in the future about a new trial they're doing or testing, and it could easily bring momentum back into this. So I'm gonna write GTXI back burner, or you know what? I don't know why I've never done this, but I'll bring up Word. I keep forgetting I have Word. October, tomorrow is the 15th. So far we got VT. It's been holding $3 support. And then $4 resistance. Then we got AGRX. AGRX was the play last week. IGC and NBEV, of course, and GTXI. GTXI, back burner, recent huge gap down, failed FDA. $15 million float. So we got that. And then going back, what else did we have? It's going to be hard because the inverse ETFs, the overall market, the way it pulled back, that's going to steal a lot of attention, like I said. So a lot of these are just going to fall off until market conditions stabilize and start showing strength again. Until then, inverse ETFs are going to be the play. We had CLDC. One second, I gotta turn a light on real quick. CLDC just faded off. SYN. You're gonna with the market pulling back the way it did, you're gonna see a lot of low floats pop up because, like I said, traders want to trade, they want to make money, and they see the overall market's red. You're gonna have these chat rooms and these trading gurus pump up low float stocks like SYN, and you don't want to get caught into something like that because this is what happens. a chat room of 500 people all buy 2,000, 3,000 shares of a low float stock, that's going to spike it up from $2.73 to $7. And then it's going on off on everybody's scanners, and they see it, and then right at the top here, that's when the chat room starts to dump it. All those 500 people dumping their thousands of shares, and you're the one that got caught and bought in at the top and chased it, and they're dumping it all on you, and it crashes all the way back down. This is greed, and that's panic. You'll see this a lot on charts. The more time you put into the market, you'll start to see this over and over and over and over again. And that's why I only really like to play stocks with a catalyst. You know, and a stock that spikes like that on a low float with no news, the SEC could halt it. You know, I've seen stocks be halted for weeks, months. It's not good. OHGI was in play, wasn't it? Last one, and then we'll just move on to what happened Friday. OHGI. What happened with this? Okay, this came out with a deal. A One Horizon Group enters deal to offer on-demand video music streaming service. You see that right here with the news. And then it started with this. It soared 69% after company acquired intellectual property rights. What is, let's see real quick, OHGI. The float is 28 million, so it's in my range. I'd play a float of 28 million. Now let's do technical analysis on this. Let's start with the 65 minute. 65 minute here. It looks like it's making higher lows still. Let's see. I'd put that 30 cents, 30 cents, 37. See, it topped out here at 44 cents. $0.30 is going to be a tough resistance for it. Go to the 15-minute real quick. See, because right here, the 13 EMA is at 25 cents. And then when you move up on this, I mean, it's got room to run. It really does. But you got right here, 40 cents is going to act as resistance, because this is where it broke down. See, when you look at the history on it, I see these, you could easily tell it loves to move. It loves to spike, pull back, and then start to make its way back on up. Another U-shape way back here. I'm going to keep OHGI on my watch list for sure, because even on the daily, it's still making higher lows. With the break of resistance at 30 cents, this has room to run up to 35, 40 cents. And they could come out with news on this as well. See how it's forming like this pattern right here? Very, very steep one. But watch. Then we'll draw another trend line right here. So, putting that together, you've seen it's making this wedge right here. Now, I'll be watching this wedge to see if it breaks support here at 25 cents or if it breaks out of this resistance trend line right here at 30 cents. Remember on the daily chart, the 13 EMA right here, where does it say it's at? It's at 24 cents. Look at where this is bouncing at, 25 cents. So it's bouncing as, and the 13 EMA is acting as support, and it's bouncing off that 13 EMA, slowly making lower highs. It could crack this support line and keep falling, or it could break out and move its way back on up to 42 cents. We'll see. So bring back up word. OHGI 13 EMA and support at 2.5 and a wedge on the 15-minute. Wait for break of pattern. So if this breaks support right here, it's done for. If it breaks out of this resistance line, you could see momentum and volume return back into this. The bigger the pattern is on a time frame, the more significant the move could be. So we got OHGI now. It could break either to the upside or the downside. Move to the 5-minute on it. See, when you're looking at the 5-minute, even the 3-minute, you really can't put that pattern together, can you? I mean, it's a little hard. You can see it, but let's say if you're zoomed in and you're only looking at the past 2 days, you're not really going to see the big picture up close and personal like that. That's why I always say it's always good to look at multiple time frames. Start with the biggest, 65-minute, and then work your way down, 15-minute, and see what the chart is trying to tell you. On the 15-minute, it's telling me there's a wedge forming on this. And on the 3-minute, I can see it right here, but it's not as attractive as it is on the 15-minute. You get what I'm saying? We also had NIO. I think something happened with NIO as well. Oh, this is forming a great pattern. Oh yeah. NIO came out with news, didn't it? Let's see. I'm liking NIO. I'm going to write that one down. And it's a low float as well. If we bring over this NIO, and it's a newer stock too, I think. 22 million in float. And this is a recent big spiker. Let's see. I'm just going to run through the news right here to see if there was any recent news on it. Okay, right here. That's what it was. NIO, it went up because a large stake by Tesla. So someone from Tesla took a big stake in NIO, and that's what caused this to move up. Let me see if there's anything else real quick. Can I? I don't want to read all that. Okay, this is an interesting one. I gotta read it. It has not been the smoothest of rides for investors of NIO, dubbed the Tesla of China, but the stock is racing higher after it was disclosed last night that Tesla's largest investor outside of Elon Musk also took a very significant stake in NIO. More specifically, Ballet Gifford and Company now owns 85.3 million shares of NIO, representing about 11% of the company, totaling $515 million. Wow. That disclosure provides NIO with some much needed credibility after the stock has tumbled by some 56% from the post-IPO highs it hit back in September 14th. See, this is a newer IPO. I remember that. NIO's 160 million ADS IPO priced at 626 at the low end. All right. So, just goes to show right there, that big investor, that's what caused this to go up. And this is like the Tesla of, this is the Chinese Tesla, pretty much, is what NIO is. And if I bring up the daily, I remember, yeah, this is a newer one. When this opened up, this thing was crazy. When it opened up here at $6, and it went down to $5.36, and then it ran all the way up to almost $14. And then from there, it just went down and down, and you can see it just consolidated. And then when that investor invested, it spiked it from 6 to 750, and then it hit a high up here at 833. And the 13 EMA is at 721. So let's break this down. This is forming a beautiful pattern. So on the 65-minute here, again, you can see if I draw a trend line on this, right here connecting the highs. And then I'll draw that one. It's got room to fall. Man, if it breaks this 750, I'm going to say it's got room to test $8, 750 to $8. And then if it can break $8, it's got room to run to 850. Look at the 15-minute. See, it's the same thing. And when you look at these bigger time frames, you can go back and see here the areas of where it struggled at. I am liking this though. It's got beautiful support here at $7. Support at $7 and support It's tough to say. Support $7, resistance $7.50 and $8. NIO. Support $7, resistance $7.50 and $8. Forming a pattern on the 65-minute and 15-minute. Room to run up to 850. 850 before it hits resistance right here. And then if it can break 850, it's got room to run to 950. So every 50 cents after it breaks $8, it's going to run into resistance. That's what I'm seeing. You guys seeing anything else? After the break of 8, there. Oh, and I'm gonna write the float is 22 million. 22 million and recent news of investor. Big investor. I'm liking NIO a lot. I'm going to highlight NIO green. NIO and OHGI. If I can highlight it. Awesome. That's why through the week you get yourself a notepad, like something to write in and a pen, and every day through the week you write down stocks that interest you, that have either a good pattern, a good press release, and then over the weekend you go over them. And this is exactly what I'm doing. I'm creating a game plan, creating a setup. That way, Monday when the market comes, if nothing else is going on, I can revert back to my plans I set up over the weekend and capitalize on that. Boom. Boom, sucker. That's how we do it. Real quick, ACRX. Let's look at that. So this is another one. This one's a choppy one. Looks like a FDA thing. FDA approval. I'm not interested in it. I don't like really playing pharmaceuticals. Pharmaceuticals are crazy. They just move so violently, and the risk is way more than the reward on these, I feel. Look at that. It goes from 470 all the way down to 260 and then right back up. This is on the daily. But when you look on the 15, this is a barcode stock. Let me see. Let me zoom out on this. You got support at $4. It's gapping up to a high of 5. I'd look for this to possibly pull back to 4. But when I look at the 15-minute on this, and I see stuff like this, that's a barcode stock. That's what I'm saying. I don't really like playing barcode stocks. On the 65-minute, yeah, same thing. It's barcode. Up to 470 here, and then on the 3-minute after hours, it was hitting almost $5. Maybe ACRX Monday if volume piles into it. But I'll just watch it though. I don't think I'll trade it. It moves too violently. I'm gonna say the float's pretty low on this. 41 million in float. Let's go over the little scanner I got right here. And this is Friday. Or you know what, real quick, we'll go to, I know all last week I kept seeing FPay pop up on the scanners. Let me look at FPay real quick. See if that's anything interesting. Recently had a big gap down. It's got room to run up to $1. What just happened with this? Someone sell a lot of shares. Let me see. I think this guy unloaded a lot of shares. Let's go to the 15-minute. I just kept seeing it pop up on the scanners. It was up here at $2, gapped all the way down here to 80 cents, ran up to $1. That's what it did, and then it fell right back down. It's nothing interesting. But real quick, I want to go over the inverse ETFs before we jump into what happened with the other stocks. So let's go to layout 1. TVIX and the SPY. You can see here the SPY corrected itself from 292 all the way down to 270, and the TVIX spiked from 25 and it touched $52. People say, you know, if they have a small account with 1,000 or 2,000, let's see, I'll do 2,000. If you got 2,000 and you divide that by 25, that's 80 shares. This thing spiked $25 up. 80 times 25 is $2,000. It would have doubled your account. But that's being patient and holding it from 25 when it touched 52. And that's hard to do, because these indexes, they swing violently. So this did a triple top right here. Or I'd say this is a quadruple top. 1, 2, 3, 4. And you can see there's opportunity on this. Comparing it with the SPY, it kept coming down to the support right here, and it ran up to resistance here, and here. Now with inverse ETFs, you can't really go back and look at the history on the daily chart and see the resistance areas where it touched and whatnot. You gotta kind of flow with it with the SPY and just look at the intraday charts and see where it's holding support and holding resistance, because it does like to get into a range and bounce from resistance to support, resistance to support, until it breaks out of that range and then, you know, just goes crazy. Like right here, this spiked up and then it was in a range from I'd say around $40 here to a high of $45. It spiked up, touched there, come down, made a bit higher low, bounced right off of 39, came up to resistance here at 45, and it blew through that resistance and touched 52. Pulled back, bounced right here at the old resistance of 45, and then spiked up to 48 and closed. The next day, it gapped down, and it gapped all the way down to this old support here at $39. You see that? And then it went right back up, started forming higher lows, came up to the resistance here at 45, and it looked like it was struggling there for a second, and then it finally broke free, and it ran up to almost $50. And then from 50, it was in a range from 49 to $45, that old resistance, which was holding as support. And then from there, that's good scalping opportunity. Getting in at 45, the old resistance is holding as support, riding it up to the current resistance, which is 49. Repeating right there, comes down, and then it finally came down and it failed, and then it closed right at the old support here. And that's just how you do basic technical analysis on this during the day, and that's how you find opportunity. The SPY does the same thing. That's how you compare it and do that. Now we'll bring over the SPY. Now when you're watching the SPY, let's see, where's a good area to start? We'll start right here, okay? We'll start right here. So we'll put a resistance on this. and we'll put a support on this right here. Okay? Now, this is currently trading in that range from 288 to 286. And you can see it's going back and forth into this range, getting smaller and smaller. That means it's getting very tight, and a big move is about to happen. And it gets tighter and tighter and lower, and then it drops down, and look at this crash down. And then it forms another range right here. Right there. And right there. You see how it had its move down and then put itself in this range from 282 to 283. And if this was to break out to the upside, it'd come right up here to 285. And that would act as resistance, because when it bounced right here, it failed to bounce higher right here. And 285 is like a mental area. And if it was to break this 285, it would run all the way up here to 286, its last known resistance. But going back to this, you've seen it was in this range. You could either play the range and compare it with the TVIX and see what the current range is on the TVIX. This came up, bounced up and down, up and down, up and down from 11 o'clock to 2 o'clock. It was in this range for 3 hours. And then it finally broke out of that range and it dropped down. Had a little bounce there and then continued to sell off. Another little bounce, continued to sell off, and then it just went ham and just kept dropping and dropping and dropping. And then over time, you let the downtrend play out. Let it play out until it starts forming a pattern where it's showing it's in a range again. But this is still making lower lows. That's telling me this is still in a downfall, downtrend. But then we get this action right here. And then it starts to fall again. And when it comes to that high or low right here, it made a new low right here. And when it made this new low, look at those wicks right there. You see those very, very long wicks? That's telling me price is being rejected at this area right here. So I would take that as a hint that the market's telling me. And it starts to move its way back up, comes back down, makes a higher low right here, and then gaps up and starts to trend down. And it established a low right here, and it's telling me, okay, this is another higher low. It's higher than this low, and it's higher than this low. So I'm going to put a support right. You could put one right here and right here. And when it came down, it bounced in that, and it came up to this high here, and I'd put a resistance, I would say, right here and right there. And then the stock comes up, and it came up to that first resistance at the end of the day, and that's where it closed Friday. That's just how you do technical analysis on this when you're trying to play it when nothing else is going on, and compare the range and where the SPY is to the TVIX. And that's just what you do. Like right now, this came right up to this resistance line right here. This is down here at its support right here. So this is basic right here. This is a beautiful, beautiful example. If this resistance gets denied, Like if you had unlimited trades and you're a trader and you could trade as much as you want, right now would be your perfect time to get in on the TVIX at $40 when it's at the support. The SPY is hitting its resistance and it would start trending back down. That's what you would want. And the TVIX to start moving back up to its resistance up here. And then you would start to sell when it approaches its resistance. That's just basic trading. Basic technical analysis. I just broke that down really good for you guys. For free, too. Look at that. Boom! Mind blown, man. And I'll do that for you guys because I love this community. That's why I started doing this. I want to show others that you can do this if you put the hard work into it. You got to dedicate yourself to this, and you got to have a love for doing this. I love breaking down charts, doing research, doing technical analysis, and reading news filings, and just having an open mind about everything. And your boss is the SPY, pretty much. You're your own boss, yeah, but your big boss is the SPY, because the SPY is always right. You're not always right. The SPY is always right. And I just want to observe what the SPY is telling me to do every day. You guys have any questions? If not, we're going to move on to what actually happened on the scanners Friday. Alright, so what we got here? When I'm looking at the scanners, I want to see the percentage change, and I want to see the change on it. Does it have a good range? Like YGYI, it's up $3. So that's a lot of opportunity on that. So let me click on that. It's got a nice daily chart going from 4 all the way up to 15. Let's look at the intraday chart here. Nice. Look at the opportunity. Even when the market's red, look at that. There's still opportunity out there. The days the market was dropping and crashing, this thing's making moves from $8.50 to $11. And then from $9 to $15 almost. That's awesome. Why is this up anyway? Let's see. So YGYI is in the cannabis market. So this is showing me that the pot sector is not dead. Let me go back. YGYI. Flow of 6.6 million. You know, and also again, if you have a small account, these higher priced stocks, don't let the price scare you away. If it's got volatility from, look at, from $12 to 15, that's a $3 move. So let's say I got $1,000 divided by 12. That's 83 shares. 83 times $3, that's $250. You grew your account 25%. You know, it's all just a number. It's the psychology behind it, I'd say. So YGYI, I like this one. This has got a huge run up, like I said though. But there still is possibility it couldn't be done. It's got support here. It's looking like at $12.50. $12.50, $12. With resistance up here at 14 or 13.75. It's got a big range on it. Look at that explosion from 10 all the way up to 14.45. That's a $4.50 spike right there. Wow. I'd want this to pull back though. To pull back to this 1050 area and have that 1050 hold as support and then start working its way back up to this 14 area. That's what I would want. But it currently has support at $12.50 to $12. The more time frames you zoom in though, it's got support here at 11. YGYI. Current support 12 through 12.50. Resistance at, what do we say, 13.75 to 14. I want to see pullback. I want to see pullback to $10. $10.50, $10. I wouldn't want to chase this at all. Even, let's look at the daily chart real quick. So, volume on it. Friday, it traded 6 million in volume. Thursday was 700,000. Tuesday was 2. So 5, 2, and 6. So the volume on this is actually pretty low. Not a lot of people really are playing this, I would say. Look at that weekly. And it's making all-time new highs. This opened, what is that, June 12th of 2017. See if I zoom out on this. They put a trend line on this. Right there. You see how that worked? It came up to this high, comes down, and it kept hitting this trend line high right here. 1, 2, 3, 4, 5 times. And it blew through it once. And it's like right at that area we were just saying. Where did I just say it had resistance? At the $13.75, $14 area. And look at where this keeps bouncing off of. That trend line. Ain't that awesome? There's really no trend line support though, so the only thing I would have to go off of is it could pop at the support here at $11. It could. Let me see the fifth. I'm trying to figure out what is the best time frame to look on this at. And I think I like the 5-minute the best. The 5-minute and maybe the 15-minute. I'm just going to draw some support here. Support at 12. $10.50. And $10. That's where I'm calling support at. And it's struggling to hold above this 14. What I want, this is my opinion, for this, like I said, to pull down either to 12 or $10 and start working its way back on up. I want to wait for this one. If I wait for this, there's my payday. I don't want to chase it because it's showing me, why would I chase it, get in, and have it pull back on me $2? No. That's where a lot of rookies mess up. So I'm liking YGYI a lot. See, already going into Monday, overall market conditions are scary looking, and I got 3 stocks that I like a lot. Support at, I said 12. $10.50 through 10. Resistance at 14. No. Alright, moving on. So far, this watch list is pretty legit, I'd say. Wouldn't you guys agree? That's a lot of stocks going into next week. So far, I got 8. But really, what is it? 4 of them I'm going to be watching closely. Alright, what else we got? We got CORI is next with 27 million in volume. This is below the 50 and the 200 day. This gapped up and did nothing. Look at that. What happened with this? And I know these weekend market recap videos are super long, but hey, it's for the dedicated people out there. I'm doing this anyway, so why not just share it with others? You know, that's the way I look at it. And I'm really starting to think, leave comments below if your opinion on what I should do, but this is what I'm thinking I'm gonna do. Through the week, I think I'm just gonna stop doing market recaps and just save it for the weekend and just do one big long video of the market recaps. Or should I continue to do through the week the market recaps and on the weekend just come out with random videos like reviews or talking about charts and just how-to videos rather than these long market recap videos. Just leave an opinion of what you think in the comments down below. Again, I do this for you guys. I want this community to be the best, you know, and I don't, like I said before, I don't want this to be just a guru telling, you know, his followers what to do. I want this to be like a country club, a club for traders, a community, you know, a place where traders can feel welcomed, share ideas, share trading strategies with each other, and where we can just all grow as a community, have each other's backs, you know, because it's always good to have multiple eyes in the market. And it's tough, though, with the community. I want dedicated people. I don't want sheep. I don't want followers in the community that's just going to ruin it for everybody. I don't want trolls in here that just like to hate on others. You know, there's enough hate in the world. Let's just enjoy this, grow, have fun, and bank money. You know, this is what it's all about, and I love doing this. But CORI gaps up, went sideways, nothing. even if you look at the time frame here, what did it gap up to? It gapped right up to this area where it was. It does have a good, like a swing to it though, if you were a swing trader, I think. Alright, moving on. CGA. Nothing. IMMY. IMMY had a nice move up from 225 up to 3. Came right up to the 50-day moving average, but it's right there at the 50-day. That's going to act as a big resistance wall. AQMS. This had a nice squeeze forming on it. Look at that. The 50 and the 200-day and the 13 EMA right in the middle. That's a nice squeeze on it. Ran right up to resistance here at $3. Look at that. But from 315, it's got room to run up to 350. 325. Yeah, I'd say 350. If it can hold, though. ACRX. We went over ACRX, didn't we? Wow, that's just some crazy moves on that. Yeah, we went over ACRX. I would just add ACRX to the back burner and just see what it does, honestly. I just added it to the back burner, that's all. Alright, what else we got? RIOT fell off. NXTD. IOVA with the $2 move. I don't know why I keep doing that. Okay, so it recently had a downtrend here to $10. It's got room to run up to $13.75. And analysis upgraded it. They put a price target of $25 on it. And they recently came out with positive FDA. They also did a public offering too. IOVA. Let me see. Float 85 million. Held by institutions, 92%. That's a lot. That's too high for me. VIPS. No. What about Cron? Is Cron still in play? It's bouncing right off the 50-day. We could add Cron to the list. Cron could always come back up and CRON. It's bouncing right off the 50-day. If it can get back above $10 and hold above 10, slowly making new highs or higher lows. So it's showing, you know, the downtrend here. See how it went sideways, gapped up, and then it sold off, and this downtrend just kept making lower lows, lower lows, lower lows, lower highs, lower highs. Then here, it starts to form higher lows. So I would look for it to come back down and form another higher low before it tests this $10 area. Same thing with it on here. Even if it does break this $10, it's got room to run to 1050-ish, 1050-ish. Possibly come back down, test $10, run back up to 1050. If you can break 1050, 1070, and $11. I like the idea of this though, coming back and making a comeback. How's TLRY doing? TLRY it's trying to hang in there. Look at that. You got your grind up, it pulled back. Nice move up here to $1.75-ish. Pulls back to 125. Now it's testing this 150 area. And it's been testing this 150 area the past few times. So that's a key area. Let's draw that out. So let's draw that on the 15. Let's see. $125, $150. You know what would be good on this? My opinion, Fibonacci. Let's see if I can get it exact. Exactly 300. Good enough. Man. Alright, delete this. That. And that. Yeah, I'm liking this. You can see how the 61.8 on the fib acted as a support right there. Now it's trending back up to this 50% retracement, and that's been acting as a resistance. Yeah, I'm liking that on this. I think I'm going to create another tab for, let's see, hold on. I got Monday, Tuesday. Real quick, let's change the earnings to pot stocks. Rename it pot stocks. And we'll add IGC to it, NBEV, TLRY, CRON. What was the other one? YGYI? I think that's it for that. You can see they're all green though too. Yeah, that's all of them. Delete all these. BKS, hold on 1 second. BKS. See how I had that rounding top and it fell right back down? I was looking at this at the beginning of the week. Yeah, PYX has been crazy, going from $20 to $52. Same thing with CIG. What's CIG do? Doesn't really move too much though. It gaps a lot. Look at that. Doesn't really move gaps. Doesn't really move gaps. Nah, no thanks. CLDC had a big pullback. And AGRX testing that $1 area. AGRX, that it's gotta be on watch still. The back burner for that dollar test. Because it came back. So you can see here, it came all the way up to 90 cents, came all the way back down to 33 cents, and then it came all the way back up. It did break over $1, and then it came all the way back down to 50 cents, and now it's been at 75 cents. So yeah, AGRX has to be on watch. Has to be. Let me see here real quick. On the 10th, analysis actions sees path forward for Agile Therapeutics keeps at outperform price target of $3. Stock dives 7%. As long as this stays above 50 cents, it's in play. Let's see one thing real quick. I just love putting the Fibonacci on these just to see. High up here at $1.10, I'd say. Let's see. No, it's not really obeying the Fibonacci too much. I'm just going to keep AGRX on the back burner just to see what it does. That's all. So we can delete that just on Monday. And then CRMD still climbing up. Look at that. This week moving from $1.25 all the way up to $2.40. CRMD, back burner for sure. It is getting overextended. Look at the volume on it. Big volume here, and then it goes down, and then you can see it just trends up and up. Like this U shape, and then a bigger U shape. This is on the 65-minute. Hold on. Caffeine break, alright guys? Caffeine break. 2 minutes. Alright. CRMD. Like I said, I'm leaving it on the back burner because it just keeps getting more and more and more momentum. Doesn't mean I'm going to play it. I'm just going to watch it, see what it does. If anything, I'd want it to pull back from this level back down to the 150s and then start working its way back on up. I don't see any news for it. What's CRMD do? Let me try to pull this up. CRMD has a float of 78 million, and the profile is it's a biopharmaceutical. So treatment of infectious and inflammatory diseases in the United States. Catheter-related infections. And it's on the American Stock Exchange, AMEX. Let me look at this on the 15-minute. Hold on. It just keeps moving up and up and up. When is this going to run out of gas? Okay, now we're starting to get into this area of resistance ahead. We go to the weekly real quick. See? Here at 244, so it's going to see resistance at 250. But if it can break through 250, it's got room to run up to 3. This is on the monthly. Or the weekly, I'm sorry. And then this is the monthly. See how it does a big U shape here? All the way up to this 250 area. So this 250 area is going to act as a lot of resistance. But if it somehow can break through 250, looks like 420 there on the monthly. But on the weekly, $3. Okay. Let's see. I'm going to draw resistance 250. Yeah, 330. Support at 2. And support at 150. 150-ish. Looks like it likes to trend down, go sideways, and then start trending up. Let me come to the 3-minute here. Hold on. Thursday, it just grinded up all day from 150 all the way up to almost 2. Opens up at 2, pops up a little over 2, pulls back just below $2, and then runs up to 235. The thing, it took me a minute to realize, when you have support and resistance levels, let's say support at 2, doesn't mean it's exact $2 it has to hold as support. It's the general area. So from 2 to $1.90, $1.85 could still all be considered support. I try to look at stocks in increments of 25 cents. So from 2 to 225, 225 to 250, 250 to 275, and $3. Do I do anything else besides trade? I work full-time 60 hours a week at Old Dominion Freight Lines, and then just recently started doing YouTube, starting to get into affiliate marketing. A lot of stuff, man. Trading has opened up a lot of doors. A lot. But I am not a full-time trader. I am working to be a full-time trader eventually. And I'm not like one of those gurus that charges for, to teach people. I do all this for free. So I just like sharing what I know. And I was just doing a little rant earlier about what I want Trading Learning 101 to be. I don't want this to be a stock picking thing. I want this to be literally like a club for traders. A club where you can come here, feel safe, share ideas, and have fun, and just grow as traders. That's what I want Trading Learning 101 to be. There's a lot of scams out there, and I'm not part of any chat rooms or anything. Trading to me is a lot of just sticking to the basics. Doing what you're good at, sticking with what you know. But I'm going to be adding CRMD just to the back burner and see what it does. So we can delete that from Monday and then move on to Tuesday. EARS, that could still get momentum and carry up through to 160s. But like I said before, I don't like EARS. I'm not a fan of it. MNGA, that's done for. CVSI is OTC. We have all this. ALT, PTIE, just slowly dying off. But it is starting to grind up and make higher lows. PTIE. Just a low float. I think, what's the float on PTIE? Whoops. It's my web. PTIE. 5 million. PTIE at the break of probably 150. That's when traders will probably want to dive into this and take a stab at it. These low floats, when the market corrects itself, always love to pop up, like I said. You can see that right here. Goes from $1.20, spikes up to $1.70, and then falls right back down. You gotta be careful with these low float stocks. And how's GEVO doing? GEVO and GERN. I was liking nothing. Okay, and GERN. I was really liking GERN the past until it had this big drop off right here. But this was breaking out nicely from $5 and running all the way up to $7. And then Wednesday, look at how many stocks I had on here Wednesday. ASTC. It's below all the, just below all the, just too much. Riot. If Bitcoin pops up, that's when you keep an eye on these blockchain companies like RIOT. ATXI making big moves. 225 to 550. I think I was keeping an eye on this Thursday. What was it? I think it was, no, it was Friday. I was watching this because it popped up from 3 to 4, and then it came back down, and it was just sitting here at $3.80 to $4, and it kept moving up to $4.50. And this is one of those low floats where when it does something like that, because the float on ATXI is low, I know that. Yeah, 5.6 million. When something like that happens and it keeps popping up on trader scanners and nothing's going on, that's when you can just see parabolic supernova moves. What was that one? A while back, it just went crazy. What was it? AWX, I think. Yeah, AWX went from $2.20 to $20. You know, that's why when a low float pops up and it's holding its gains and just keeps popping up and hits the scanners and it's still holding, you gotta keep an eye on it. You got to, because all it takes is that one huge buyer to set things off and volume to push into it, and it just goes insane. Yeah, this was some good times right here. Very good times. $2 to $20. And you'll remember stocks that spike huge too. Just like AWX. If this was to spike up again and pop up, traders remember how much it spiked, and this is going to get attention. Doesn't mean it's going to get attention now, but I'm saying if it ever pops up again in the future, traders are all going to remember the move it made right here. And that's what attracts traders to a stock. They see how much money can be made on this. Happens all the time. It's like literally every 2 months, a stock goes supernova parabolic. But just like Wednesday, I can delete all these. We got a pretty good watch list going into next week. And then Thursday, Friday, I didn't really add anything. We got the pot stocks. I got my swing charts set up. Just keeping an eye on those. We'll go over those in a second. GTXI. Yeah, that's going to be on the back burner, but I'm going to add to these. So I got VTVT, AGRX. These are all the stocks I'm going to be keeping an eye on going into this upcoming week. NBEV, OHGI, NIO, YGYI, CRON, ACRX, CRMD. See, that's a lot of stocks going into next week, but really the only ones that have my attention, let me bring back up Word, OHGI, NIO, and YGYI are the three main ones that have my attention. So let me add that to Monday just to better organize myself. NIO and YGYI are the three I like going into Monday. I like NIO a lot, and I like YGYI a lot. I see a lot of good opportunity with both of them. My opinion, though. So last week, Monday, Tuesday, Wednesday were all green days, profitable days. And then Friday, I broke my rules and I traded and I gave back half of what I'd made Monday, Tuesday, Wednesday. But overall, still green on the week. And that's what, at the end of the day, that's what it's all about, being green on the week. Going into this upcoming week, I'm not going to try to force anything. First I want to see what these three stocks do compared to the overall market. I want to see what the overall market does this upcoming week. Is it going to start trending back up, or is it going to start crashing back down again? Because literally the SPY closed right below the 200-day. So it's going to be interesting to see how that opens. And if you missed the video, I know this is a very long video, 2 hours, but we went over everything. All the stocks that popped off this week, the overall market, comparing the SPY to TVIX, and then I also went through, I want to share with you guys a cool little website. Let me bring it up over here. So yesterday I was going, I made a short little video about ETFs and inverse ETFs, and about the more you know, the more opportunities you have in your bag of tricks. So last week would have been a great opportunity for the TVIX, that going from $25 to $52 because of the overall market conditions. But like I said in my previous video, I'm not an expert on inverse ETFs, but I know the general concept of ETFs. And this is a great website right here to where you can go to the ETFs and it tells you all the ETFs. And what I love about the ETFs are the possibility of it. You got your bullish ETFs and you got your bearish ETFs, and all you gotta do is compare them, and possibly, I wrote down a list. We'll go over the list real quick. So I got inverse ETFs and ETFs here of gold, natural gas, oil and gas, real estate, the S&P 500, and technology. And whenever one of these is getting very volatile or making big moves, you can capitalize on that. So first up, I'll go over gold. So gold is NUGT and DUST, dust. Now when gold gets very volatile, or even if you want to trade ETFs and inverse ETFs are getting very, very popular. They are, for just trading and taking advantage of. You just got to know how to trade them. So Nugget here, well, first dust. You see dust had this big pullback from 41 to 31. Compare it with Nugget. Nugget went from $12 to $16. You see that? Dust broke the 50-day and fell almost all the way down to the 200-day. Nugget broke above the 50-day and ran up above the 50-day. Came down, bounced off the 50-day, bounced right back up. And this is a gold ETF. So Nugget and dust. The other one is JNUG, JNUG. Same thing. You can compare all of these because they're all gold ETFs. JNUG and JDST. So JDST is the same as dust. And you would compare NUGT and JNUG to these two. And then next is natural gas. So GASL and GASX. Doesn't look too appetizing here on the intraday, but GASX on the daily, you see it moved up from $16.31 to almost $20. And then you compare it here to GASL, this fell from 23 down to 18. So when this moves down, this moves up. When this moves up, this will move down. Move out a little bit so you can see. You see the sideways action right here and right here, and it's a mirror image. It's the opposite of whatever this does. This moved down, this moved up. And that's natural gas. Next is oil and gas, and that's GUSH. And DRIP, DRIP. Again, you see how Gush pulled back from 43 to 32, and then DRIP went from $5 to almost $7. And that's just comparing these ETFs, taking advantage of it, like I said. And this is oil and gas. And then real estate is DRN and DRV. See that wicked drop right there? And then on this, you see the wicked spike. And then we got technology, TECS and TECL. You got your spike up from 17 to 24, and then you got this downfall here from 174 down to 123. And these are ETFs and inverse ETFs. you can see the technology follows somewhat just like the S&P 500. If I go and type in SPY, see, pretty much exactly like it. And then you got the SPY. You can compare the SPY to TVIX as an inverse ETF. I think TVIX is 3 times leverage, and UVXY is another one, just a little bit higher priced than TVIX. This one's in the $50. And another one is, what is it, TZA? Yeah, TZA. TZA went from 8 up to 11. TZA and TNA. TNA is just like the SPY. You see how that fell? So I would compare TNA to TZA. And it had its fall here from 93 down to 65. And TZA, like I said, went from 8 up to 11. And you can find it all on this website. Just go through this website, click on ETFs here, and go through all these inverse ETFs and pretty much pick out which ones you'd want to track. And I just showed you guys the list of all the ones that I want to start tracking and keeping an eye on. They even have the bonds, the 7 to 10 year treasury, the 20 year. They got international equities, strategic beta ETFs. They have all kinds. And ETFs are getting more and more and more popular. Like I said, I know about ETFs. It's just I'm not an expert on them. I know the general concept, and I've always wanted to learn more about inverse ETFs and ETFs. Back when the market was having a correction at the beginning of the year, I was taking advantage of the TVIX with the SPY. TVIX. Back at the beginning of the year, but TVIX was lower priced. Back in this area, TVIX was like $8 a share, and when it started correcting, it went from $8 to $20. Made a lot of money when the market was correcting these 2 times. When other people are freaking out and thinking it's going to crash and saying there's no opportunity, there's opportunity. You just have to look for it. But I'm liking, let me pull this back up. I almost want to just make another watch list tab of all these ETFs that I got, just to watch them and keep track of in the future. I think I'm going to do that. ETFs. Go to columns and settings. It really is interesting to keep track of these inverse ETFs and ETFs. Let's see, where did that news thing come from? You guys got any questions or anything? Anything you guys want me to go over? Let's see, I'll bring the news way over here. So I'll add Nugget, JNug, Dust, JDST, that's all the gold. And then GASL and GASX. It'd almost be nice to make a tab for like gold, natural gas, oil and gas, real estate, and technology. I feel like that would be too much though. GUSH, DRIP, DRIP, DRN, DRV. All right, then we got the SPY, TVIX, UVXY, TNA, TZA, TECS, and TECL. And those are all ETFs, inverse ETFs that I like. Doesn't mean you guys have to follow them or like them, but those are the ones that I want to start tracking and following from now on. And they're all ×3 leverage. So like ×1, it's the more times it's leveraged, the more volatile it is, pretty much. ×3, it moves more. ×1, it's not going to move as much. I want it to be volatile. I want big moves to make more money. That's the way I look at it. And then you got ones over here that are ×1, ×2, and ×3 down here. So you can click on one. It'll show you the one that you compare it to, the history on it, you know, the Bloomberg index, the inception date, the index top 10 holdings percentage, the weight percentage. It just breaks it all down for you. Monthly, quarterly breakdowns. Just a really cool site. There was also one more thing I wanted to show you guys. I gotta remember where I found it. So what is an ETF? An inverse ETF is an exchange-traded fund constructed by using various derivatives for the purpose of profiting from a decline in the value of an underlying benchmark. Investing in inverse ETFs is similar to holding various short positions or using a combination of advanced investment strategies to profit from falling prices. An inverse ETF is also known as the short ETF or bear ETF. Breaking down, this is a lot of reading. Breaking down inverse ETFs. See, inverse ETFs, along with other ETFs that are derivatives, typically are not used as long-term investments. You trade them. You don't invest in them. Many inverse ETFs utilize daily futures contracts to produce their returns, and this frequent trading often increases fund expenses. Many inverse and leveraged ETFs carry expensive ratios of 1% or more. Despite the expensive ratios, it is still easier and less costly for an investor to take a position in an inverse ETF than it is to short sell stocks. See, this is a good one. One advantage of inverse ETFs is that they do not require the investors to hold a margin account, as would be the case for investors looking to enter into short positions. There are several inverse ETFs that can be used to profit from declines in broad market indexes, such as the Russell 2000 or the NASDAQ 100. In addition, it is possible to buy an inverse ETF that focuses on a specific sector, such as financials, energy, or consumer staples. Most investors look to purchase inverse ETFs so they can hedge their portfolio against falling prices. And that's a great example of why I went over all these other ETFs and inverse ETFs like gold, oil and gas, natural gas, financial, the SPY, stuff like that. When those start to get volatile and making big moves, volatile moves, or crashing, you could take advantage of that with inverse ETFs. And that's why everybody's talking right now about inverse ETFs. That's going to have all the attention going into next week. Okay, double and triple inverse funds. While there are many ETFs available, there are that are designed to profit from a decline in a sector or market. Several add leverage to their objectives. Fund providers such as Direction and ProShares are popular for their leveraged ETFs. These funds, such as the Direction Daily S&P 500 Bear x3 shares ETF, use derivatives to provide double and triple the daily return of a given index. Like others derivatives based on ETFs, these funds are based primarily by speculators, I can't say that word, and momentum players that frequently hold on to these positions for no more than a few days. Most amateurs take unlimited risk for limited gains, which is not a good business strategy. Instead, learn from the mistakes that you make in the market and master the basics of trading for profit while managing risk. It's all about managing risk, you guys. Risk management. Managing risk, right there. If I can get it. Whatever. It's all about risk management. So what that was saying with the times 1, times 2, times 3 is that whenever the SPY is falling and making big drops, a leveraged ETF times 3 is gonna give volatility times 3 more, if you know what I'm saying. If it's times 3 more, it's gonna move more. It's gonna move 3 times as much as the overall market's falling. That's why we've seen the TVIX making really big, violent moves. The way it did. See, it moved here from $40 up to $50, very violently up, and then moved violently down. That's because this is a times 3 ETF. A times 1 is going to do something like this right here. Move up a little, move down a little. Move up a little, move down a little. That's why you see a lot of day traders play the times 3 ETFs compared to the times 1, because there's more, it's more risk reward with the times 3 leveraged ETFs. But if whatever you don't understand, just type it into Google, go to Investopedia. Investopedia is awesome. They have all kinds of definitions on if you don't know what a specific thing is. Go to Investopedia, type it in up here. What's the NASDAQ? Type in the NASDAQ. Right there, NASDAQ. Click on it. What is NASDAQ? There you go. I love Investopedia. If ever you don't know what something is, type it in on Investopedia and they break it down. Look at that. What is NASDAQ? Breaking down NASDAQ. Recent history of NASDAQ. Save on trades. All kinds of great information. And then they also have related articles. So you can really dive deep into what's going on. But we've been going now for almost 3 hours, guys. Wow. Another jammed-packed video for you guys that probably not many people will watch. And only if you're a dedicated student or a dedicated someone who wants to learn will watch this all the way through. And that you gotta dedicate yourself to this. And me sitting down, I just sat down for 3 hours straight doing research and going over the market, creating a watch list, plotting out what a plan that I want to happen coming Monday. And that's what you do. You go into the market with a plan. It's all about risk management. But this is a little watch list that I created right here. If you're interested and just want to track to see how this performs through the week, go ahead. I don't mind. These are my opinions. I am not a financial advisor. I do not give out financial advice. This is for entertainment purposes only and educational purposes only. But this is my watch list for the upcoming week. Go to here, I'll save it, save as. I'll just save it on my OneDrive. Watch list weekly. Save. But go ahead, add Investopedia to your little search, hit the star button and save it to your tab. Also, save, leverage, and inverse ETF. This site right here. This is a great website. But until next time, guys, that's going to be it for this one. The weekly watch list recap video for the previous week. Prepare yourselves for the upcoming week, guys. It's going to be a crazy one, I think. But thanks for joining me, guys. This is something I do every single weekend. Feel free to drop by and hang out, have fun, do research, and go over the market with me. I love doing this. And until next time, guys, be patient, have that discipline, and study, study, study. All right, guys. Later.